Good morning, everyone. Welcome to our Tuesday morning trading room. The market's just opened up. Bear with me here while I get you my monitor. And if I could get somebody just to confirm that we're looking at the right prices. This is the NASDAQ. I'm having a little issue with my data feed. So right now we're trading 42.41 3/4, 42.42. Somebody can just confirm, please, and thank you. Now we're dipping down to, looks like 39, hopping around 39, 38, 38.25. Anybody? Yes. Thank you, Ken. I have no other way to confirm whether or not my data feed is accurate. The first time I did the trading room, there was something wrong with my data, and everybody said, "Hey, Eric, what's going on? What's wrong with your data?" All right. So this is the NASDAQ. For those of you new in the room, just a quick reminder that I am happy to take a look at any market which is of interest to you. So please don't be shy to ask. NASDAQ's one of my personal favorites. So that's one I tend to focus on. I've also got gold and crude oil up this morning on my other monitor. So it looks as though we may have opened with a little bit of a gap of sorts. You can see that yesterday, for the most part, at least toward the close, the market took a bit of a nosedive. The morning session pretty quiet. The afternoon livened up somewhat. So this was our morning. Yawn. And then the afternoon, this was after the lunch hour break. We put in a nice little rule of three. If you didn't catch that, a nice little trend change signal, and after that, they just kind of kept going. Reversed on themselves in the overnight, so this is going to be a pretty big opening gap down here compared to where the market left off. So we'll see what gives. Right now, you can see they're waffling again. A lot of sideways action going on here. We do have a red bar buy signal here on the hawk. The hawk kind of giving us early heads up, as is the raptor. The raptor may be working on a soft edge sell, and I'll get ready here with two contracts. So the soft edge sell essentially is, oh, it's right there. So we'll try shorting that. And the soft edge sell is when we get this little retest of the high and the failure. Now this tells us that the sellers are active. Even though we've got a sideways range, it tells us that the sellers are quite active on this market, and I'm going to get a stop here and I'm going to pull it above the high. I'm going to give this trade a little bit of room because it's very early. This is very aggressive on my part. And you can see here on the hawk, if we had sold the failure of the red bar buy, we would not be in this trade just yet. In fact, that may have been a better place to take this signal. But we can duplicate this trade also on the hawk. Now we're flashing a buy dot, a warning dot there, but it's fortunately we're drifting into yellow bars. So it's starting to look as though maybe, just maybe, we may see them tail off here. So this little low right here looks like it's going to be kind of important. Oh, and here they come. I should get back to my Raptor trade. Okay, the Raptor trade, we've hit the break even. And we've got a stop in play here. I'm going to accept the break even now. There we go. Just in case we see a little bit too much of a reaction here. So we've hit a couple of profit targets. We hit our Raptor target, which is essentially a swing target. We hit our scalp target. And don't back up. Oh, you stinkers. Well, now we'll be looking for a cloud crossover and hopefully a little bit of follow through on that. All right, so we're getting a rule of 3 here on the Eagle. It's a very ugly rule of 3. The band is technically bullish. We are seeing a retest of the high. We've signaled once, twice. We're looking for a third signal now against this bullish band, this very mild bullish band. And to avoid doing something silly, I'm going to answer Richard's question here. Richard asks, are there any rules of thumb for a gap to fill or a gap and go? It's really tough, Richard, because of course it can do either, right? I know that's no help. Normally we expect the gap to fill. And normally we expect the gap to fill early. All right, here comes our rule of 3 signal now on the Eagle. And we're going to produce a hash mark right down there. I'm going to see if I can cover the whole mess like this. Oop, don't have our hash mark yet. Normally we expect the gap to fill, and normally we expect the gap to fill early. However, sometimes the gap will not fill until later in the session, which of course can be very annoying. The thing to remember about gaps also, here let's do a little stuff. So, you have the market coming down like so, and then the next day it opens up here. This is a big opening gap. This is exactly what we're looking at this morning. What you need to remember is, there's this big gap, obviously, and that there will be a tendency for the market to try to trade into that gap, and usually it will try to do it early. But what you need to remember as well is that this gap is really one great big bar, right? If you look at the right time frame, this is one monster bar to the upside, right? So there's a lot of buying pressure as well, which you just can't ignore. But if you're looking for a rule of thumb, as Richard asked, the rule of thumb is if there's a gap, we anticipate that the gap will fill early. And what I'm going to do is I'm going to try to sneak in on this order now. All right, they didn't slip us too bad. That's good. There we go. Come on, let's get a couple of bars here. So now we're running into this little support right here, 42.24, and we might anticipate a little bit of buying pressure coming in from there. If we can take out 42.24, we're pretty much assured our profit objective, as the next visible support is not until down here. Where are we on our support and resistance suite? Now I'm trying to run this trade out. You know, when you're in a profitable position, always let your pocketbook be your guide. So it looks like the primary resistance is down to 42.13, the median at 41.97. I think that would pretty much cover that gap. I seem to remember around 4,200 was where the market left off yesterday. So we had comparable signals here on the other tools. We had a green bar sell, which I would have actually considered given the way, the context of the market. What do I mean by that? Well, we have a market which is sloping down, and look at that. It seems to be honoring this trend line pretty close. We've had a failure of this support. There's just a lot of things suggesting the market will head lower. Oh, we need a test of the low. We need a retest of this low. At this point right here, though, where we've made a new low and we've made a lower high, that's pretty much the criteria for a trend change. We start making lower lows and we start making lower highs. But even if the market was just going to continue sideways, we know that we need a retest of the low here before there's going to be a reversal or a likely reversal. And there's enough in here that I could probably at least scalp out with a profit. So that would make that a worthwhile sell. And you see it came down, gave us a little bit of heat, but kept falling off. Now we've breached that downtrend line. And look at where we've gone back to. This whole area that was an area of contention before. So now we've breached there, and we're going to look for the same thing to happen in reverse. We're going to look for the buyers to firm this up, to support the market, in which case there's going to be a pretty good chance they're going to try to rally, although that doesn't look like very much of a test of the low, does it? All right, back to our eagle trade. If we get a little swing going on here, this will be a great spot. Actually, it's a great spot to roll my stop anyhow, because you see the long wick on this bar. That tells me that the sellers have started to give the buyers some heat and start to push the market down a little bit. And I should probably consider going with something a little bit more aggressive on the stop scenario. All right, maybe we'll do the bar high-low. So we'll give them the high of the bar here, 42.38. And it's really put up or shut up time for the sellers. Good morning, Jim. Jim says the advanced decline is 2,100 on the buy, 600 on the sell. Don't forget those numbers are going to be a little bit skewed because of that big opening gap, however. Oh, come on. So the seller's getting busy early here, buyer's getting busy early here. We're in full-on scalp mode. Hey, and we're supposed to be in scalp mode for another hour? Oh, joy. I should be keeping my stop further back. In scalp mode, I should be giving the market more room. I just don't feel like it. I don't feel like giving them all that much wiggle room. Now we'll see. Had I left my stop up here, we'll see here in a moment whether or not that would have been the better call. Well, so far it would have held me in. Here we go again with the hawk. See another red bar buy signal, which you could have bought and it would have worked out for you, and you can also use it as a failure. Now the markets are very lateral today, you can tell. Come on, get down there. No, get down there. Oh, I can't believe it. It's not fair. All right, now we're getting a first micro macro cross. I wouldn't be inclined to short it here at the hash mark. Why? Well, because we know there's some pretty serious buying right down here. And there we go. We know there's some buying going on here at 42.27, right? And there's not enough room to profit from the hash mark to 42.27. Therefore, I would delay my entry. Now, as we sneak up here and perhaps get into a macro pullback, well, there's going to be a little bit more room until we get to 42.27. So scrub that. Now we're into a macro, and now we're into yellow bars again. So we can put that on the shelf. Trend change signal here on the Falcon. Same scenario though. No point in entering on the hash mark when we know that that's where all the heat is, right down there. Jim doesn't like my break even button. He says, Eric, get rid of that break even. You're killing me. I know. It helps and it hurts at the same time. All right, here they come. So a lot of buying activity on this one. Now, our signal is right here. We know there's buying here. We know now there's a lot of buying here. So the market is, the parameters have since changed, but let me just pull this over here. So we were looking at buying below here rather than on the hash mark because we learned from our hawk trade that, there was a lot of buying activity here. So we don't want to enter here, we want to enter down here. Again, there's not enough room to profit by entering on the hash mark. Now notice this bar here. This bar, thanks to the dynamic equivolume bars, is a nice little fat bar. So we know there's also a lot of buying going on there. Therefore, we can take our order from down here and now move it below the low of this bar. Let this become our signal bar. And we can actually cover this trade a little bit tighter if we choose. Why? Well, because if the sellers come back in here now and force the market down, they've got total control, right? They put in a lower high here, and they put in a lower low here. They put in a lower high here. The buyers are fighting desperately to hold this 42.27 area. If the buyers fail, well, they're going to have to ditch and regroup, right? So in that case, we would be fairly confident that we would be trapping a whole slew of buyers out of their position, right? All the buyers that are buying through here just like crazy, their exit stops are right down there. They would be forced out of their positions, and the market would probably head down rather quickly. So that's why we would take a look at doing something like that. Now, as it turns out, the prices, the buyers were a little bit more active, and they pushed the market right back up here to the top of the trading range. So for those of you who like to trade trading ranges, this would be an acceptable place to short in anticipation of a little bit of a move lower. Caution, however, we do have this higher swing point, which is going to be problematic. And you can tell again from the width of these bars, there's a lot of buying pressure going on here. So we really need to see the sellers step up, or it's likely we're going to see a little bit more of a rally. And we're back now to the highs of the day, are we? No, not quite. But certainly to these highs. So if you want to see that as a double top or even a triple top, I wouldn't argue with you on that one. So everything's still very, very sideways, very messy. Crude oil is tailing off a little bit. Had a nice little move in crude oil here with the stock market open. It fell off a little bit. Crude oil itself on the crude oil open, nice trend change signal right here. Couple chances at it actually. Very smooth progression lower. That's always fun to trade. Yes, I agree. Jim says, looks like oil is acting weak. I would agree with that. That gap is going to be calling to us, though. And you'll notice when you're following gaps, sometimes it will take a while to fill it in. Could take several hours. We did get a macro pullback signal here, and we're working on a trend change signal here on the Falcon, neither of which are terribly inviting because of the sideways market that precedes it. That doesn't mean they aren't valid signals. It just means that if you're going to take it, hey, maybe you want to dial down your risk amount, or maybe you just want to throw a onesie on it. Right, so here's the signal. Can I cover it down there? I can do a onesie, but we're buying at the top end of a trading range. Better to let it break out and retest. And there's the breakout. Oh, and there they go. Just looking for a little bit better retest here to try to buy into this market. Of course, Paco. Paco is asking, Eric, I just bought the Geiger counter, but the manual isn't as informative. Can you give me some tips on using the Geiger counter? Absolutely. Okay, now first thing you're going to notice with your Geiger counter is that you probably got your bars and lines and everything cropping up in front of your Geiger counter when you see that my Geiger counter is in front of the chart. How do I do that, you ask? Well, there's actually several layers on your chart. So first let me show you how you handle this as we're waiting for our retest. If you click on, say, the bars on your chart, you're going to see all these white little dots. If you hold down the Shift key on your keyboard, and if you roll your mouse, you're going to see here on the Raptor, there's actually 10 levels. And watch what happens as I change the level number. I'm holding my Shift key and I'm rolling down to 1, and see what happens? It moves the bars to level 1 of level 10. And what I want to do is I want to roll the bars away so that they're actually at the back. They're at level 10. And you're going to need to do that for everything that seems to be poking through your Geiger counter, which means your trend line, right? You're going to want to roll it out of the way. See how my trend line goes through now? So get the trend line out of the way. You'll want to do the same thing for arrows and so forth. Okay, so that's how you clean that up. Now the Geiger counter itself, there's two main components, and we've got the histogram, and we have the dial and needle. I guess that's three components. Four actually when you consider the trade indicator, which is this little envelope that keeps popping up around the last bar. The histogram basically gives you a visual of the recent time in sales so that you can see, all right, in this case, there was a whole lot of buying pressure, but it wasn't really absorbed by the sellers. See how the buyers, there's more on the buy side than on the sell side? So that tells me that there's a lot of buying pressure coming in. The needle also will tell you, in this case, the market is currently much more bullish than it is bearish. One of my favorite parts of the Geiger counter, however, is this dial. The dial keeps flip-flopping back and forth. And what I want to see is, I want to see the dial pull over and hold one way or the other. So you see how it pulls over here and it's holding, it's holding, it's holding, it's holding, it's holding. That's good. We don't just want to see it flip-flop back and forth, back and forth. Why is that good? Well, if it pulls and holds and holds and holds, I know there's a lot of sellers chewing through the sell orders. And likewise, if it goes here to the upside and it pulls and holds and holds and holds, that tells me there's a lot of buyers going through the buy orders. Now we'll see here in a moment whether or not we're going to get a top come in. No, we're not. I thought almost that we were going to see the market start to establish a top. So it will happen here sooner or later. We're going to see the sellers really start to chew into these buy orders. And what that does is it tells me that a reversal, at least short term, is likely. So if I had bought this cloud crossover down here and I'm currently long, and I'm wondering, should I get more aggressive with my stop? Well, I would be keeping a close eye on the dial here on the Geiger counter. Last thing I want to do is see it pull and hold. It's not doing it now, but if it holds here for like 2 or 3 or 4 seconds, that's sellers really digging into the market. And as a result, I can probably anticipate that the market's going to move a little bit lower. Oh, see how it's holding there? Now, if the buyers come back and do the opposite thing, well, then I know the buyers still have control of the market, and I may choose to, keep a more conservative stop. And of course, when it's dead even like this, the market is evenly balanced. But that's the quick overview of the Geiger counter. It shows you the active market flow. It shows you immediately who is in control of the market, the buyers or the sellers, and what you can anticipate in terms of a short-term move. See, so, okay, now they're waffling a little bit. They're kind of trading punches here. But you see how we're getting a little bit more on the sell side, and the buyers aren't exactly absorbing it? And that means that we might be looking at a little bit of a top forming here. That the buyers may be running out of momentum. Oh, they're still pretty even. Yeah, right now they're more or less dead even. Whatever report that was that hit the floor sparked the market a little bit, rallied it up, and now you see they're starting to chew into some of those buy orders. No, they're still pretty even. There we go. It's holding. Nope, they let it go. But watch it for a little while. It really doesn't take long to learn. You're going to see that it's going to get in there and it's just going to stick on one side. And then a few moments later, you'll see the market actually go higher or lower as a result. And you'll say, hey, how did that happen? And it will be because the Geiger counter told you in advance. Paco asks, can you change the size of this indicator? I don't think you can. Here's the auto scale. No, that's not it. No, I don't think you can. But send an email to Adam. You know, he listens to you guys. He really does. And it may not be a big deal to make a mini Geiger counter. That's what it was. Manufacturing index came out at the top of the hour. Thanks, Tony. So we'll just watch the Geiger counter here for a moment. And we'll see here if we can't get some selling. So you see we have this little island in the buying. It looks like it was more or less absorbed by the sellers. But look at this. We got this little spike here in the selling now, and not really enough buying to offset that. So that suggests to me that maybe we're going to see prices decline here a little. Again, this is not so much a long-term indicator as it shows you immediate momentum. Did you notice how the dial pulled here to the buy side and stuck? That may show us that the buyers are coming back. But right now, it's fairly evenly balanced. Oh no, there we go. It's holding, it's holding, it's holding, it's holding, it's holding. All right, it's holding there. Okay, so we just saw the sellers really stick it to the buyers. The buyers are coming back though. I was going to say, let's watch the chart now and see whether or not we get some follow through on that. But it looks like the buyers may have absorbed all that selling pressure as the dial kind of swung over. Oh, there we go. They're selling. They're selling. Oh, they're selling. They're still waffling. But like I say, when you see it pull over and stick, like it's sticking, it's holding, it's holding, it's holding, and if you were generating a buy signal, well, that's what you would want to see before you get into a buy. All right, so here's our buy signal. There's the buyers. Let's see, are they going to push it or are the sellers going to knock it down? Sellers are chewing into the orders. Oh, the sellers are chewing into the orders. Oh, there they go. Okay, here come the buyers. They're holding. Is it enough? Oh, there come the sellers again. So if I was looking to buy this, I might not necessarily take it on the hash mark. I might take it above the high instead. See, because the sellers are really sticking it to them. There they go. They're holding, they're holding, they're holding. And the buyer's not really able to fight it off. And look at that. We're starting to trade a little bit lower. Now, I'm not saying we're going to see a full-blown reversal here, but it would help me gauge how I want to treat my entry signal here. All right, so we'll put that up on the shelf for now. Paco's also asking, how do you use the trade forecaster or the trend indicator? I believe you're referring to this one here. The trade forecaster tries to predict what the current market condition is and what the next one is likely to be. So in this case, we are full on scalp mode for about another 34 minutes, after which we're going to move into trend mode. What I tend to do with the trade forecaster, some people say, well, do you just look at your hawk if you're in scalp mode? No, not necessarily. Scalp mode means that the market is probably going to be more like this, where you're going to have shorter follow through on the signals and more violent swings. So as a result, you may naturally end up trading the hawk more because your profit targets are tighter. But if I was in an eagle trade, like when we did this eagle trade here, before I got looking at something else, I was going to tell you, don't let your pocketbook be your guide. If you're down in this trade and you're up $100, we know we're in scalp mode. We know the market is moving sideways. Whenever the market is moving sideways, you should be looking at tighter profit objectives anyhow. It's just the nature of the beast. So that's what I use the trade forecaster for mostly. So just because we're in scalp mode doesn't mean we can't get a pronounced run like this. However, it does suggest that most of the moves are going to be short-lived. The swings are going to be more violent. Therefore, we probably want to have bigger stops and tighter profit targets. If the opposite is true, where it's in full-on trend mode, well, then we can probably anticipate greater follow-through on our moves and less violent reactions, in which case we can probably have a bigger profit target and a smaller stop loss or a tighter stop loss. Not necessarily smaller, because our risk is based on our percentage that we've allocated. So when the market is in full-on trend mode, we expect more follow-through and less reaction. We're starting to see some of that already as scalp mode starts to wind down. When the market is in full-on scalp mode, we expect less follow-through and bigger reactions. Swing mode will be somewhere in between. We may or may not get a more pronounced follow-through. We may or may not get a more violent counter-trend move. So that's how I use the trade forecaster. Knowing, like I say, we're in scalp mode, I'll be more inclined to just try to scalp out with profit when I have it. But the market looking a little more bullish now at the moment, in spite of this retracement here on the hawk. And you see the Geiger counter is stuck here on the sell side. We'll see whether or not we get some follow through on that. Okay, Randy says his trade forecaster is totally different than mine. Okay, so with the trade forecaster, check your open time. It has to be the open time on your computer. So the market's open at 6:30 my time. And it shouldn't matter, but I have 50 days loaded, 50 days of data. I do believe the trade forecaster only uses 25, so it shouldn't matter that much. No, Tony. Tony asks, doesn't the trade forecaster depend on what chart you have it on? No, it doesn't. That's the reason I don't duplicate a lot of these indicators. See, I could put a Geiger counter. Where'd you go? Geiger counter and a trade forecaster. I won't put the support and resistance line. Sure, why not? What the heck? We'll put support and resistance lines on here. So we're going to load all this up for your viewing pleasure. Uh-oh, no, I hope I didn't break it. Come on. Uh-oh. Oh, there we go. All right, do I have my, yes, I do. Okay, you're going to notice that all the information is duplicated. Oh, I have the wrong start time on my trade forecaster, sorry. But the information will be exactly the same. I'm not going to go into it and adjust the trade forecaster time, but if I did, you would see that the bars are going to be identical. My support and resistance suite lines, you see they're identical, 42.45 quarter, 42.45 quarter here on the Falcon. My Geiger counter information is identical. Now that doesn't mean you can't have all these tools on your chart. You know, it doesn't mean I can't have trade forecaster, Geiger counter, support and resistance lines, and day ranger all on my chart if that's what you want. But for clarity's sake, I tend to only put one on each chart. So on this chart, I just happen to have my day ranger. On my Falcon, I have only my support and resistance suite, the Geiger counter on the Raptor, and the trade forecaster here on the Eagle. But hey, they're your charts. Set them up however you find them most useful. I'm getting a very tempting first micro macro cross signal here. Hey, can I cover it above the high? This is a little bit risky. Why? Well, look at the context here, folks. Look at what preceded that. Big move up, and here I am looking to sell. Not exactly plan A. Now we're perhaps moving into a macro pullback. Still a first micro macro cross. It's just a little bit deeper. Allow me to cover the trade a little tighter. And gives me a little bit of room here before we get to these lows. If in fact the market is going to try to get back down there. Like I say, not the type of trade that gives you a warm fuzzy feeling because of that big move higher that preceded it. Come on, get down there. All right, so we're into a macro pullback. And again, this consolidation is to be anticipated. You need to remember not all first micro macro crosses work out. It's a very high probability signal, but not all of them work out. And you'll do better when you look to the left sometimes too. Don't just focus on this last couple of bars. I'm confident the trade will work out. I'm not saying that, but what I am saying is that we are shorting a pretty aggressive uptrend. So all I'm doing now is I'm waiting for the sellers to show up again so that I can become more aggressive with my stop. Start to bring my stop in. Now we're getting that green bar sell. Okay, anytime now, sellers. Yikes. Are they really going to walk away from this? Aye. Well, we knew it was a strong market. All right, let's see what else we got going on here. As they go up to run my stops. There you go. That's why you need to keep, the overall context in mind as well. Funny thing that we didn't produce a first micro macro cross right about there. Did we get a trend change at least on the Falcon? No, got an early trend change. The Eagle and the Raptor were the two that actually flashed the buy signal. The Eagle here off the hard edge bounce, and the Raptor also with a hard edge bounce off of the first cloud. Yes, I agree, Tony. Tony's not too happy with that. But again, it's the context, right? I get people writing me all the time, and I'll probably get an email from somebody today saying, Eric, I took this sell signal. You said the trend change signal on the Falcon was a strong signal. Why did that not work out? I sold it here. I covered it here. It should have worked out. Why didn't it work out? Well, because the context. Look at what preceded it. And yes, you had all your ducks in a row here, to be sure. You could even see this as a nice little head and shoulders type formation, right? And we come back with a sell signal. The market goes down, doesn't get to the profit target, and reverses and goes the other way. Why? Well, because we had a great big uptrend coming into the market. Does that mean the market will, always fail on that type of signal? No. No, our profit objective, especially if you had taken it off of the second one here, the profit objective is very reasonable. Look at that. In this case, you would have been fortunate enough to hit your break-even trigger if you were running one and you got out at break-even. But let's say we took the first signal here, which is more realistic. So we take the first signal, the market comes up short, doesn't hit break even or anything, and then it starts to peel against us and stops us out. Well, unfortunately, it's just one of those things. Why did the trade not work out? Well, because we had a very strong uptrend preceding it. Right? We saw the market explode to the upside. Is it a trend change signal? Yes. Is it a high probability signal? Definitely. Is it 100% correct? No. And this is one of those times it was a good signal. There's nothing wrong with it. And then the market started to go against us. Now you really had to be paying attention. You had only one chance to adjust your trade, and that would have been on this bar right here. Could have brought your stops down to above here, and then you would have been tagged shortly thereafter. But even if you got hit for the full amount, remember that's why we use our risk model here, so that you're never risking more than you can afford to lose, for those unfortunate times that things don't work out exactly as we had hoped they would. So for those of you who were going to write me about that one, that's why. That's why it didn't work out. Yeah, is there an opening for that? Tony says I should be the Canadian president in the U.S. Oh, American politics are fun to watch, if nothing else. We have enough fun with our own politicians. All right, so the market obviously in an uptrend seems to be ignoring that gap from earlier. So going to get into that gap? Probably not today. Okay, we got a couple of signals going on here. We've got a trend change signal, technically a trend change signal. It's formed away from the away from the trend line here on the Falcon. When you see a signal like this print and it's away from the trend line, there will be a tendency on the part of the market to try to pull back into that trend line. So if you take the signal, you don't want to cover the trade right here, knowing that the market may try to come into that trend line. You're going to try to keep your stop a little bit further away. Now, right now, it hasn't done that. It's still drifting, but it will sync up with the trend line here soon, because that's just what it does. Looks like we're getting a little more selling pressure here now. You can tell from the width of this bar. The Geiger counter is starting to pull a little bit more. The market seems fairly evenly balanced, though, for the most part, between the buyers and sellers. And Jim says one of the signals that he likes to watch here is a yellow bar long buy signal here on the YM. It came off the hard edge bounce, even though it worked out quite well. Jim said he wouldn't have taken that one. But you know, I know it's easier to see this in hindsight. One of the things that I like to do sometimes too is I like to judge who has the bigger leg. Like, you know, the sellers are pressing hard, the buyers come back, the sellers come up short. We come back, we generate a buy signal. This is where the soft edge buy comes from. The buyers put in a bigger leg. The sellers tried to push the market down, but now it starts to look a lot like a bull flag, doesn't it? And then they come out of this hard edge and they produce a buy signal. Now, at the time, there's no way to know that this one's going to explode. However, when you look at where is the next resistance level, it's reasonable to assume that the market's going to try to retest the high, right? Just like it tried to retest the low down here. Do we have enough room to profit in this area? Well, I think so. I think there's enough room that if I took the signal here, I could at least finagle the trade to break even, or maybe pretty close. You know, if I start printing a bearish bar here, I have enough room that I can at least bring my stop. My initial stop would be down here. I could at least bring my stop from down there to maybe here or even here, or maybe even break even if I chose. And if the market continues lower, okay, fine, stops me out. If it just makes a little hesitation and a stutter step and starts going higher, well, I can always hop back in if I think, again, that there's enough room or if there's more momentum or whatever the case may be. But I think this is more a matter of logistics, really. That if you think there's enough room to profit before the market is likely to encounter some resistance or perhaps even come up short, then go for it. And as it turned out, this one, of course, had a pretty substantial move to the upside. Let's take a look at this situation back here. So here we come into the hard edge, we come out with a bounce, we generate a sell signal. The same situation as what we were just looking at. Do I think I have enough room to profit from here to here? And if I don't have enough room to profit, do I have enough room that I can adjust my stops? Well, you can see it doesn't look as attractive as the other one, does it? So this one I would probably pass on. This one, when it printed, it looks a little bit more inviting. I have a little bit more room up here to play before I get into trouble. That's how I look at it anyway. All right, we should just be buying in here blindly, you know that? I'm waiting for a pullback that may never come. So here we had a no signal in particular. Oh, a cute little 4-arrow consolidation right here. This is actually the post 4-arrow consolidation, which I'm late on. It's a signal we don't focus on very often. But it's the signal after the consolidation period, the break. We're looking for just for that trickle of momentum to take us a little bit further. Yeah, Jim says oil's not doing anything. Is it losing sync with the market? I think so. I think if there's nothing else going on, um, the two follow each other pretty closely, but they're not really tied to each other. I know, Jim, you like to watch the YM, which is a little bit more industrial and perhaps more sensitive to the price of oil. We're just kind of in limbo here now. Market not doing much of anything. Oh, Jim's going out here on the ledge. He's got the YM. He says the cloud is at 56 ticks, so the market's overextended, and he's shorting from 92. So shorting at the top end of this channel, looking for a move lower. Good luck to you, Jim. I think you could be due for a reset there of sorts. Pardon me. Traders will be looking for any excuse to buy this market. Any hesitation, any kind of pullback, they're going to be looking for a chance to get in. Yeah, Jim says just short one contract. Yeah, I get it. Just dipping your toe in the water. No real clues one way or the other, though. That's odd. Jim just wrote, I don't know if you guys know this, but there's shortcuts to your drawing tools. F6 is a horizontal line. And uh, what Jim is doing is he's using the dynamic equivalent bars and he's hitting like F6, like here's a nice fat one, so he'll throw a line down there. There's a fat one right here, so he'll throw a line right there. That kind of stuff. Well, what he's doing in error is he's hitting F5 instead of F6. Well, why is that funny? Well, because F5 is reload your Ninja script, which of course um, shuts down your chart as the chart reboots. Yes, and it kills the Geiger counter also. Yeah, it resets everything. Okay, momentum starting to slow somewhat. Are we going to get that pullback now? So yes, macro pullback signal. Again, the momentum has died from what we saw before. So if you're going to do it, maybe you want to go in a little bit lighter. Take it there, cover maybe below here. It's worth a poke, but don't be surprised when the market tries to back up on you a little bit. We're still printing warning dots. Gold is starting to head a little higher. That's going to put a little pressure on the stock market, I think. Had a nice little first micro-macro cross in gold right here. A tough one to take because no real test of the retest of the low. So when you're setting those up, of course, you need to keep your stops a little bit deeper. And here comes that macro pullback signal. Come on, get up there. Trying to give the trade some wiggle room. You see, if they come back down here to this obvious support area, they may breach it ever so slightly, and then the buyers may choose to buy it up again. Which is why I'm trying to hold my stop down here rather than bring it right underneath there. Oh, not too much. Not too much in the way of follow through at the moment. Crude oil trying to inch higher, gold kind of heading a little lower. Yeah, that's the thing with advanced decline numbers. Jim, refreshing the advanced decline here, we got 2,300 on the buy, 500 on the sell. He says that yesterday the advanced decline was over 2,000 and it sold off. The average never got below 1,800, which is odd because you wouldn't expect a number like that to be pretty bullish. Yeah, the advanced decline just tries to keep a pulse on the market, but it's not a surgical tool, that's for sure. All right, so let's see if the buyers come back here one more time as we get back down to this 73 area. If not, well, I'm probably going to get more aggressive with my stop anyhow. If this bar finishes strong, Then I'm going to start bringing my stop up. There we go. All right, last chance. You'll find this is true for most traders, that traders will give the market a couple of chances to work out, and then they'll say, screw it, it's not working, pull the trade. The real trick here is to get the gold trade and the NASDAQ trade to work out, because the markets tend to move opposite and we're long on both. Okay, gold trying to inch higher. That's going to put some heat on the stock index. Here's gold now, producing a mildly higher swing, coming back with a buy signal. Oh, and I think we just got tagged on the NQ on that little bump up. So I need my gold trade to at least offset my NASDAQ trade. And hopefully make a little bit more. All right, you guys, we're going to close up the room a few minutes early here today. I apologize. I promised a friend I would give him a hand with remodeling his bathroom, so I got to get going and give him a hand with that. Oh, the curse of being handy. If you are trading this afternoon, the market is definitely bullish. That gap from the morning still bothers me. However, I don't think we're going to see a full-on reversal into that gap, but I would not be surprised to see a reversal into the hard edge, which means we could see prices trading back down to 42.57, 58, somewhere in there. I think that is a reasonable expectation. Tomorrow, Wednesday, remember we're meeting at the open house, the alternate venue, and I'll see you guys at that time. Be careful though, the market's been a little bit wonky today. Bye for now.